Well, my next guest says the banking regulator should get the garden hose out and give the banks a cold shower of reality to help stem a housing market frenzy. Ed Husic, Labor MP, joins me now live from Canberra. Mr. Husic, thanks very much for your time. Your own view, how big a problem is this becoming, the issue of housing affordability, in particular those key markets of Sydney and Melbourne?
On two fronts. One, the pace of growth in terms of house prices and the type of clearance rate activity we saw, for instance, on the weekend, where in Sydney nearly 90% clearance rates, 80% in Melbourne. These have been, basically taking people's breaths away, and it's been described as a market frenzy by some analysts. So you've got to wonder the sustainability of that situation. And then you apply it in parts of the world that I represent, James, out in Western Sydney, where in my neck of the woods, real estate agents anecdotally tell me that investors are snapping up the lion's share of properties that are going. And so a question begins to arise about affordability and whether or not young people will have a chance to live close to the CBD and therefore close to work, or are they going to be pushed to urban fringes? So there are a whole stack of social issues that the Treasury Secretary was reflecting on as well in those comments that you were broadcasting earlier.
We did hear, though, the Prime Minister suggesting he's happy, he's glad, and it's a good thing that house prices are going higher.
Some people would be cheering that on, but there are a lot of people that wouldn't be, from young or first home buyers who are wondering whether or not they'll get a start in the sort of more overheated markets of Sydney and Melbourne. But also the regulators had some questions about the way in which lending's been conducted. I mean, their survey, their hypothetical borrower survey that they released the details of in May, showed wide variability in lender behaviour. Sometimes a 50% difference between lenders borrowing to the same borrower, that some lenders were not taking into account borrower living expenses and their capacity to pay, that there were issues about whether or not they were factoring in haircuts on loans or on income, I should say, and that they've had some, what they said, was quite disconcerting in parts, the type of evidence they were seeing about lender behaviour, and whether or not that's then you take from that, is that fueling this type of market frenzy that we're seeing? And I think it's a valid question that needs to be addressed, not shrugged off by the Prime Minister in the way that he has.
So you've got APRA at the moment working, we believe, behind the scenes, in particular in that investor segment of the market in the likes of Sydney and Melbourne, looking to cap essentially the growth at some 10% within those markets. Is it, from your view, not enough? Yeah. Not enough at the moment?
Well, they've set the benchmark in terms of what they expected for growth, and it's been slightly exceeded. You've seen the rate of growth over 2014 for investors at about 11%, the growth in loans to investors of about 11%, and that's more than double what was being provided for owner-occupier, or the growth in owner-occupier lending. So clearly it's slightly breached that benchmark. But APRA itself is saying that they are looking at the whole process of what tools they would use. They're looking at increased capital requirements, but they're looking at doing it all behind closed doors. And frankly, if there are lenders out there that their own survey work is finding are doing things that are raising eyebrows at APRA, you would think that they would basically make or be a lot more transparent about cracking down on lenders that are exacerbating the rate of growth, particularly in terms of investment loans, and that would then be a signal to the rest of the market that this is a serious issue. It's a serious economic issue about whether or not the rate of lending growth is sustainable and whether or not the serviceability of those loans can be sustained.
Is it something, I mean, we've heard from the RBA in particular, but also from APRA, very much jawboning, if you like, the banks to maintain a sensible and rigid loan structure when it comes to the accessibility of loans, not to relax their standards too much. Does it need to be a message beyond the big banks right through the lending space?
Again, when APRA did their borrower survey, they included some mutuals in that as well. They included a range of different lenders, and so it's clear that they are, when they look at the ADIs, when they look at the lenders and they see some of the behaviours that are in place between more generous lenders versus more conservative ones, they were trying to send out the signal to the market that they are keeping tabs on that type of behaviour. But now I think the issue is, James, are they prepared to act? And are they prepared to act in a way that will send the strongest possible signal to those people that are out there chasing market share and using lending practices that allow them to achieve that market share in a potentially unsustainable way? Are they going to force the rest of the market to play catch-up, reduce their standards, and therefore create a bigger economic problem for us? APRA can express concern or jawbone, as you've said, or they can do something about it and do it fairly solidly. And the question is, when and how will they do it?
What, as well, I suppose, is the other question. What should they or could they potentially do in terms of sending that strong message to the market when it comes to lending practices?
They've said that they'd look at imposing higher capital requirements above what has been mooted through FSI and also through the international standards on capital requirements on institutions. But they have also indicated to the committee that I'm deputy chair of, the House of Reps Economics Committee, that they would have these individually imposed capital requirements, that these requirements would be imposed quietly without being a market reportable event. And I actually think they need to consider whether or not they change that position and make it something that would have to be reported to the market so that shareholders can ask questions of boards as to whether or not they're effectively managing risk and whether or not their lending standards are reflective of a much more robust approach to managing risk. I think that's what they've really got to consider, James.
The banks no doubt would argue that they're taking all proper steps in terms of managing the risk of their loan book, and I imagine one of the difficulties would be that there aren't too many sectors in the economy at the moment doing well. Housing being one of the few standouts that against a pretty weak backdrop and looking to impose further curbs might not go down altogether that well.
You're absolutely right. I mean, the growth in dwellings or dwelling construction was seen as a key plank of the transition from the mining boom and seeing growth in the non-mining sector, and that type of housing construction is important, absolutely. But in having said that, it needs to be done in a way that has due regard to whether or not the loans that are being issued can be serviced by borrowers, that realistic assessments are being done on their capability to meet those repayments. The rise of interest-only loans was structured in a way that interest-only is paid for the first 5 years. I mean, APRA has raised eyebrows about that as well. We cannot afford to see a growth in borrowers defaulting, and that this creates further headaches down the track in an economic sense. And so it's all about sustainability. Yes, we do need to see dwelling construction increase, for sure. It's an important part of economic activity, but we want to make sure that that economic activity is durable and that we're not creating problems for ourselves down the track. And we need the government to say to APRA that basically they've had the chance now to jawbone. They need to move to an action phase to ensure that the lending is sustainable and that it's not going to create an economic headache for us down the track.
Ed Husic, do have to leave it there, but appreciate your time. Thank you.
Good on you, Jane.